It's Wednesday, May 8th here, and it's very, very stormy and rainy outside, so that could cause some problems here. But let's get into it. Let's take a look at what we got because there's some news where there's divergence in Europe already coming through. Now, some EU members and some non-EU members, generally European countries. I said EU in the title because, like, Sweden technically is a part of the EU. Switzerland, I don't. Is Hungary a part of the EU? I know Switzerland isn't. Hungary, I'm not 100% sure to be honest, but I think it is. But anyways, some EU members, some non-EU members. Anyway, Sweden is following Hungary and Czech Republic in easing its monetary policy for the first time since hiking cycle began in 2022, when inflation surfaced in the aftermath of the COVID pandemic. The Risk Bank overnight lowered its policy rate by 25 bips to 3.75, making it more likely than the ECB will also jump on the bandwagon. The shift is noteworthy to global investors. Geez, as it highlights the current central bank divergence taken across the world realistically. So when inflation appears to the when inflation approaches the target while economic activity is fairly weak, monetary policy can be eased. This is what Sweden's Risk Bank said in a statement. However, the outlook for inflation is fairly uncertain as inflation now falls from very high levels. There is still uncertainty on both upside and downside, and the adjustments of monetary policy going forward should therefore be characterized by caution. Right, we've seen that caution being exercised by the FOMC out of the U.S., which has now for several meetings in a row just kept rates as is without doing their proposed cutting cycle, which was expected to have 7 cuts this year alone. Now just very, very far from it without having a single one so far. So this contrasts with wait and see that we've been talking about with the Federal Reserve out of the U.S., which is taking a more gradual path towards easing. Many in Europe are scared of getting stuck behind the curve as growth slows and unemployment rises, and the housing market is also of concern, with many mortgages across the region carrying short-term variable rates, which can pinch the economy if interest levels stay elevated for a little too long. Excuse me. So there have been some worries that cutting before the U.S. could cause the krona or the euro to lose its value against the greenback, which in turn would lift the dollar denomination imports and even cause inflation to resurface. In many cases, and the European policymakers seem to be less concerned about these effects, putting more of a focus on domestic conditions and not linking policy to other central banks. I have said that we are data dependent and we are not Fed dependent. This ECB Christine Lagarde makes it known. She declared in a press conference in April. So we've seen that, right, with the ECB still, I think, generally broader, lower rates than the what we've got over in the U.S. So we also have tensions out of China. TikTok and the Chinese parent company BitDance have sued the U.S. federal government to block a new law that would force a sale of the popular short video app or face a ban in the country. TikTok said that the bill violated the First Amendment right to free speech, adding that the divestment being demanded is simply not possible. Things will likely head to the Supreme Court as Washington pushes ahead with efforts to protect its national security interests, and the Biden administration is also revoking export licenses that allowed Qualcomm and Intel to supply China firm Huawei with chips for laptops and iPhones. So those tensions continue to rise. I was talking about this recently, about the electric car, the EV notion, right? Elon Musk is very aware of the situation over there, as if China starts to enter into the U.S., right, which I don't think is necessarily possible. If China starts entering into the EU, for example, with all these electric cars, and they've already entered with smartphones and whatnot, they could take a very, very large market share from the U.S. in itself. There's not that many Teslas realistically in the EU. They have their own, right, like Renault, Fiat. They have like Opel, I think, has electric cars, but they kind of suck in comparison to what China has over there. So that's going to be a very interesting continuation. These guys keep butting heads. So another one of the things that we're going to be talking about right now is Tesla as well, right? Speaking of EVs, Elon Musk, right, CEO, reportedly proposed testing full self-driving software in China through robo-taxis during his surprise visit to the country last month. While The government in Beijing was open to the proposal. Tesla would still need approval to collect and transfer data in China to train in the software. Musk was also said to have sent one of his trusted lieutenants back to China to lead operations there following back to back layoffs and executive exits. And in some of the other news, the US NHTSA has threatened Tesla with $135 million in penalties unless it provides more information on last year's autopilot recall. Interesting stuff, right? As there's still a lot up in the air. Tesla's been one of those names that's just been getting beat up more, I think. Over the last, like we saw a pretty strong rally last week. Right now, to begin this week, you can see it's gapping down fairly heavy on some of that news. We're getting pulled down, going to fill that gap that was created last week, and this could be it for some of this upside. As I expect markets in general to have a decent little turning point as we stand, Tesla's one of those names that's getting beat up the most. Another name that got beat up is the House of Mouse, Disney. So down about 10% to about 105 a share. Disney, it might be down even lower here pre-market as we come into this. But yesterday we traded down to 105 around. Disney wrapped up its worst session in 18 months on Tuesday. The company reported a profit for its entertainment streaming division, Disney Plus and Hulu, and forecast full combined streaming business profitability in Q4, including ESPN Plus. So what went wrong? Many analysts and investors believe that the decline was kind of an overreaction driven by a combination of sell the news and some fears about Q3 loss from the direct-to-consumer business. Disney's box office and TV business might still be a problem, but does the pullback represent a larger buying opportunity? I think realistically, right, last earnings period that we saw, like it was pretty solid earnings, but the last earnings period that we saw a massive gap up, if we go fill that gap, you trade close to that 99, I think that presents a better opportunity as these markets, what I'm looking at right now, have some expectation to get a little swing lower. So, let's take a look at this a little more. Let's take a look at these equity markets. Let's take a look at these equity markets. So the S&P 500, yesterday we topped out. We had a distribution high into that 52, like 22, 24 area that put some upside pressure. There was a lot of volume that accumulated there. Decent sell side comes in. We're selling now a bit lower. We're in the midst of battling into this like low 90 area, 51 like low 90. The question is this going to be a bear trap or is this going to be the continuation of the current trend that we have in a lower high? We're still in limbo. Right, we're still in limbo, and I think this most immediate downside move could be met with some buying off the open to see potentially a lower high from the overnight session. But realistically, we're below a lot of selling that transpired yesterday that got trapped. So if we start selling from 52.05, 08 area, I expect to see a little more press to the downside. But realistically, if we want to be stronger on the sell, we have to just reoffer the 93 and start selling from there and under that 85. That's going to be the case for the sell side. Otherwise, 85 and 93 also present opportunities for these buyers to sneak back in. We're in a period right now where this past week has just been treacherous volume, low volatility, that's just been slow as hell. That rotation into that 24 area on the S&P yesterday lasted about 3 hours. So that in itself should tell you just trade these key areas, reduce the size, potentially even scalp around, right? And don't expect very large moves unless you're willing to just sit there and risk a decent bit of this to get that larger move, right? I'm mainly looking at a decent bit of swings realistically to see if we can get some of this motion, but reducing the trade size is a very, very important factor for this week. And if we can see some of this downside momentum, I think that volatility starts spiking and we start selling off a decent bit. But that's very, very dependent on if we sell from that 52.05 area, which is what I'm going to be watching to start off the day. A little rally, see them get a little trapped there, and then continue that momentum lower. But right now, sitting in a limbo between 93 and 85 area, a much, much harder reason to get active in these markets. So the longer I get information, maybe the first hour or so, the higher probability I understand what some of this movement and direction kind of wants to do in these markets. So with that being said, let's open up our live trading room today. I'll see you guys in there. It is Wednesday, halfway through the week. Let's see if we can wrap this up on a strong note as we started off on a slow note. So I'll see you guys tomorrow. I'll see you guys in the room. Check out TRADEPRO.